gas flames and pipelines. These are common sights in the Niger Delta. It's a visible reminder that Nigeria is a major player in the international oil trade. The industry may be half a century old, but with trillions in natural gas reserves, some believe the future is bright. Currently, there are a few industry reforms being crafted in Nigeria, and these are designed to get more local companies to invest in the oil and gas sector. Expecting major changes, the international oil companies are selling off, mainly their onshore wells. Seplat is a young local company taking advantage of the changing climate. Timing is everything, especially now that the global oil price is down.
The US demand can shrink, the Chinese demand can expand, the Indian demand can expand. African domestic demand will more than triple in the next 6 years. I think that in the long term, the price will remain where I think it should always have been, in the $70 to $80 bracket.
The volatile international markets add to the difficult job of oil and gas production. Nigeria has a weak network of roads, refineries and railways. Also, pipelines are often vandalized, and there's a history of unrest in communities dotted around the oil-producing regions.
Take total operating costs. Let's say we're doing $9 per barrel. If we didn't have those challenges, we'll probably be at $4 per barrel.
For big oil companies, a weaker oil price means lower profits. But for the smaller ones that don't have deep pockets, they may take a bigger hit. Now, even though Nigeria is the #1 exporter of oil in Africa, it's also a net importer of fuel. And so sites like these are quite common in Nigeria. They're called tank farms. It's where imported petroleum products are stored. On the plus side, it's created an opportunity for indigenous investors to play their part in the oil and gas sector, offering services such as shipping, dredging and engineering services. One such company is J. Paul. The company is contracted to international oil majors, providing technical support. But now, some of those contracts may fall through.
They've cut down on their operations. They've cut down on the maintenance of their facilities. And because we render logistics support to them, that has indirectly affected our own business as well. In Nigeria, the cost of finance is high, double digits and serious digit, 30%, 25%, in oil and gas. And that is too much.
A falling oil price has led to the serious weakening of the local Nigerian currency. Making things worse is that the government hasn't saved up properly for rainy days, even though it has a sovereign wealth fund.
Unfortunately, the amount of money in that fund is low, just about $1 billion. That's the starting state, which cannot even do anything. Then again, at a point in time, we created something called excess crude account. Unfortunately, because of the revenue leakages, we have been unable to grow that account.
Nigeria's economy is clearly under pressure. Some economists even predict a significant slowdown in the year ahead. Others are more optimistic, saying these are temporary hurdles, and once the oil price recovers, Africa's #1 economy will rebound, basking in its newfound status once again.